Read your call with interest. I mean, BP has been the subject of this huge debate among the investment community. Why do you like the name so much right now?
Thanks, Brandon. Good morning. So for me, BP is transforming from an integrated oil company to an integrated energy company. And for me, BP is right to change. Long-term stewardship ultimately requires that the company evolves alongside the society that it's there to provide energy for. The production for BP is likely to fall 40% over the next 10 years. And yet where I think it is misunderstood is that that doesn't lead to a 40% fall in cash flow. If anything, we actually see cash flow higher going forward from that upstream business rather than lower as they upgrade the portfolio. There's a lot of efficiency, there's a lot of digitalization that will come through from that business. So actually cash flow goes up even though volumes are falling. And at the same time, you've got a lot of cash flow coming from the marketing division, so the gas stations and the products that they sell there. And that gives them time to transform the business into a low carbon energy business that will ultimately be rewarded by shareholders. That takes time, but they've got a lot of cash flow that allows them to do that and ultimately return some of that to shareholders. And we're looking at a stock that has a 5% dividend yield and can potentially double that through the process of share buybacks as well. So for us, it's a very clear.
The reason that this call, Lydia, the reason this call captured my attention so much was that BP may or may not be a model for major American or other global integrated oil companies. Because effectively what it said, and I'm going to just roughly summarize, is we're going to not quite wind down the business over the next number of decades, but upstream pulling money, pulling oil, so it used to be money, pulling oil out of the ground. That's going to kind of slow down dramatically in the next couple of years and decades. And we're going to just give a lot more cash back to shareholders rather than continuing to reinvest in it. Do you think that BP is a model, or is it kind of, pulling a Fleetwood Mac and going its own way?
I do think it's a model for other oil companies, and they will all interpret how they get there differently. But if the world is going to move to a net zero environment, we need to move from what has been rhetoric to reality. And that's going to involve a lot of hydrogen. It's going to involve a lot of carbon capture and storage, a lot of biofuels, a lot of renewables, all of which are skill sets that BP and the other oil companies have developed over a number of years. And that ultimately is what they will get the return for. It takes time to come through, but by making the switch now and in putting the investment in now, that allows them to benefit. And it will be sort of towards the end of this decade and into the 2030s, but ultimately that's what they can do. And the business from the oil and gas cash flows that they're getting now, reducing capex in that business, gives them the cash flow where ultimately they can do both. You can both cash back to shareholders now and be able to deliver a business that is sustainable into the next decade and beyond that.
And your assumptions are at Brent at $60. Are you surprised, Lydia, at how well oil is held up this year? I mean, it's up, 35, 40% on the year.
And I just wish actually some of the stock price performance has reflected some of that oil price spend. So in reality, I think 60 is a decent assumption for modelling the companies. OPEC have clearly been managing the market very well. And the big story from this week in the oil market has been what happens with the Iranian volumes. Do we get a deal? Do we not? And ultimately, we think as we get some of those volumes coming back from Iran, OPEC are still going to have to manage that market. And while we still have spare capacity, I do struggle to see us breaking out of that current trading range for it.
Yeah.
Shepard Smith here. Thanks for watching CNBC on YouTube.